Hello everyone, I hope everyone's had a nice weekend. Everyone's been well relaxed, chilled a bit, stayed away from the charts. Now we're going to take a look at what this week has in store for us. We're going to take a look at Bitcoin, we're going to see what it's been up to. We're going to do some high time frame analysis, some lower time frame analysis, and see what's going on. We've been in this range for ages, and we are still in this range, and it's going 47 days now. Massive range. Alright, but before we do any of that, just to let you guys know, so I have got a nice little present for you guys, for all my followers. We have a nice trade journal that I'm giving away. This is the actual trade journal I use to monitor my trades, to manage my entries, track my results, take my notes. You know, if you're not journaling your trades, how are you getting better? How are you documenting your mistakes? How do you know how your emotions are working or fluctuating per trade? You know, how are you tracking what your personality is like compared to your trading strategy? So this is an amazing tool that I use every single day, every single trade, to monitor my trades. Now, if you're a serious trader, you need something like this. All right. Fair enough, you could just be playing with the markets and buying and selling. That's fine. You probably don't need this if you're gambling. But if you are a serious trader, you're doing this full time, you probably need something like this. And I am giving this free of charge to anyone who is following my account. So I'm sure some of you are already using this. So if you do want access to this, just feel free to hit that follow button. Follow me on Discord as well, and hit me a message. Send me a message on Discord, and all I have to do is share the link. Okay, and I will send the link straight to yourself, and you will have this to use for your own trades. We also have, last Sunday we had our bootcamp. We had our bootcamp where we went over a lot of market structure. We did a lot of market structure analysis. We looked at order flow. We didn't quite get into ranges, but we learned a lot about the market. And you know, the people who attended the bootcamp absolutely loved it. So if you're looking to get involved in the bootcamp, the next one will be on the last Sunday of the next month. So we're in April, so last Sunday of May. So if you do want to get involved with that, have a look at the website. It's on the bio. If you have any questions, hit this button and you can send a message to myself. All right. So the Discord's here. We've had 2 testimonials, which is good. This is from the bootcamp. And he goes, yeah, bootcamp today was nice insight for beginners. And TJ made everything, so much easier. I definitely recommend it. That's great. And then we had Shay J said, joined the bootcamp. Been watching trade journal videos for a while. He was really enthusiastic. Thank you very much. Good. Offered lots of content, details, breaking it down. Excited to put what I've learned into practice. Definitely recommend. Potentially looking to get involved in the masterclasses. So yeah, why not? The masterclass, that's on the website as well. So if you do want to have a look at that, those are over here. These are just basically one-to-one lessons where I can sit down with you and we can decipher your trading strategy and see where the gaps are and plug the gaps. All right, anyways, enough of that. Let's get into the market. So what has Bitcoin been up to, and what was our trade plan as of Friday? I believe the last post was Friday. All right. So I said on Friday, these are the only scalps and swing trades that you need. So what were we looking at? First of all, we realized we bounced off this 8-hour zone. All right. I'm going to show that here actually, because it's clearer here. Just to show you what's going on. Guys, we're not going to talk about the macro structure per se. If you want to have a look about the macro structure, have a watch of the Friday video or the Thursday video. I go over that in detail, but we're still in this range. Okay, we're in this range, so we're going to play this range. We know that in terms of our range structure, this is our last. This is a very pivotal zone here. We have a very pivotal zone coming in at 59,484, and the top of our range is 74,420. Pivotal zone. So today we're going to spend some time talking about the actual mechanisms of our range. All right, so not necessarily the macro structure. All right, because we're in our range, so why not? So what were we saying? Well, in this range, we had our range high, we had our initial range low, okay, and then price bounced off that range low. So the prior range low was there, and then we rotated up, we distributed, forming a nice little Trinity Model 2. We broke down, we had an accumulation, and then we started to rally up. We broke structure, which we started to think, oh, could we be going for the range high? But we didn't. We broke structure bullishly, but then we broke structure bearishly after that. And mind you, we did react. This was a zone, so this was a supply zone we reacted from, okay? And this was a nice little manipulation here. So we had, nice little manipulation phase up here, okay? And then what happened after that? Well, after that, we started to come down aggressively, but as we came down, we left our footprints. Bitcoin likes to leave its footprints, and these footprints are what we call supply and demand zones. It's basically how we track smart money. It's how we track the high volume players in the market to see what they're up to, because most retail traders, or you're gonna be in the best position if you can read what the big volume players are doing, and if you can copy it. And that's what we try to do here every single day. So it left its track. It left this supply zone number 1. It left supply zone number 2, and I've put nice little magnets here because supply zones tend to act like magnets. They attract the price because they have fair value gaps that need to get filled. All right. So then we come down here, and as we come down here, we're coming down to our range low. We were looking for a reaction of the range low. I remember we took a long here from the second tap from the range low. But Bitcoin said, you know what, I'm coming down for Trinity Model 1. I'm going to have tap 1, I'm going to have tap 2, and I'm going to come back for tap 3 before I head off. All right, so because of that, I was stopped there. I entered that long here. I was targeting this high. Why was I targeting that high? Because we got a change in market structure bullish, making that the next target. And obviously we did get there eventually, but before we got there, we came back for a move, a third tap. All right, and then we obviously went up, and then we distributed at our supply zone, our 8-hour supply zone. Again, our supply zone working really well. However, we didn't close above this level. We did not close above this level, coming in at 66,552. We didn't close above it. We wicked it. So we didn't get a close above it, and we can see that if we zoom in. We did not get a close above it. So because we wicked it, what does it mean? It means we've created a weak level. That weak level is down here. So it means we're going to rotate down. Hence why we start to see this rotation. All right. And we get this rotation on the way down. And what does the rotation do? Well, the rotation again leaves its tracks. It has supply zone number 1, supply zone number 2. And then it has this internal range. And obviously it's got internal supplies between it and within it. Okay, so kind of a similar story we had here, right? We had a down break, and then we had our supply zones that got respected. Okay, so the markets, it does the same thing over and over and over and over again, over and over and over again. So that's why when you learn market structure and you really understand order flow and you understand liquidity and how the market moves, you will be able to confidently predict where the market is headed. So where does that leave us? Well, we do know we're looking to rotate down, all right? But we know we're in a range. We know we're in a bigger range now, this being our range. Okay, and what do we expect in our range? We expect rotations up and down in our range. We've had rotation down, came up, reacted, rotation down, and rotation up. All right, and we look to get that rotation down. So we're still playing in this range, and we're going to play in this range until the range is broken. All right, so what does that mean? What's going on here now? Let's zoom in and see what's Bitcoin up to. Before we do that, all right, we were saying that, hey, we had this nice trend line of liquidity. We had our breaking structure there, and that trend line of liquidity got run, and the target for that trend line of liquidity is down here. All right, so now Bitcoin has obviously broken structure from that range high, and it's rotated down. All right, now why has it stopped here? Why are we getting accumulation over here? Well, if you can't see the accumulation, we've got 1, 2, and potentially a three-leg accumulation. So 1, 2, 3. Why is that happening? Well, it's obvious. The reason we're getting a reaction there, it's because, all right, this zone here is a zone of interest. This is a range demand zone. Okay, and what do I mean by that? If we go on the lower time frames, perhaps let's see if we go on 1 hour. Okay, on a 1 hour time frame, we can see that we have a nice zone here, a nice midpoint demand zone. And for those who can't see that structure, if we draw out the structure clearly, all right, we have a low, we have a high, okay, and we have a low. All right, but internally, in terms of the internal structure, we have a high. All right, this is internal because we didn't take out that prior swing high. We have a low, and then we have a break in structure. We have an internal break in structure. We're going to put that black. Now within this internal break in structure, we have our zone. We have our demand zone. We have our single bar, with a juicy fair value gap in between. So for those of you who took the bootcamp, you will know exactly what I'm talking about, because we talked about this in great detail. Here we go. We've got this fair value gap here. And what happens? It comes back to get filled. Price comes back to get filled. Now, even though price rallied up and said bye-bye, price came back to fill the fair value, the zone, the demand zone, which is what we're seeing. That is the reason why price has reacted here. That zone was a magnet. Okay? So for those of you wondering why is price reacting here, that's why. Okay. So now we were looking at our levels as to where to get longs and shorts from. Okay, and one of the levels that we gave out was actually, if we look for, obviously we had the internal range, looking for plays in the internal range. We didn't really get a confirmation there. But we said another level we're looking for a trader is at our zone. This is the zone we're talking about. All right, and we're there now. So we need to analyze this zone. I'm going to get rid of this so we can see this clearly. I'm going to get rid of this as well, because we no longer need this. It's broken down. It's not useful anymore. We didn't get a confirmation, so we didn't enter a trade. All right, but what has price been up to? Well, at this zone, what we need to do is we need to look at the market structure on the way down. All right, so why don't we do that? Let's take a look at the market structure on the way down. And first of all, we're going to take a look at the market structure on perhaps a 2 hour. Let's start with a 2 hour. So on the way down, starting from the top, we've got a low low, a low high, a low low, a low high, and a low low. Okay. This is what our 2 hour structure looks like so far. This is what our 2 hour structure looks like. I'm just getting rid of this because it's a bit distracting. Alright, so this is what a 2 hour structure looks like. Well, that means on the 2 hour, we can't really justify a long trade until we get at least a change in market structure, breaking this high and entering that continuation. A possibility, but we can't really justify it until that happens. All right, on the 1 hour where we did have that zone, all right, let's see what the market structure looks like. Well, where am I going to draw the 1 hour structure? Am I going to draw it all the way from up here? No, because we can simply look at this decisional leg, or this proximal leg, the closest leg to the price action. It's the leg in closest proximity. To look at what the market structure is saying with that leg. So on the 1 hour, what do we have? We have a low low, low high. We have a low low. Now I am looking for something very specific, very specific when I draw this market structure. All right, and that's why I'm zooming in. I'm zooming in to see something very specific. And those of you who are at bootcamp knows exactly what I'm talking about. All right, you know exactly what I'm talking about, but I'm not going to say it on stream. All right, because you would need to get on a bootcamp for that one. All right, so what I'm looking for, I found, which means because I found that, that means I can confirm that this is our last lower high. So as a result, our market structure does this. Our market structure does this. Low low, low high, okay? And then we wick that level, we take that level out, we get a change in market structure. All right, so this is what, I'm gonna put that in green because this is our green structure. This is what a 1 hour structure looks like. So what does that mean? That means on the 1 hour, this demand zone has broken structure. It's broken structure on a 1 hour bullishly because this high has been taken. I actually entered a trade this afternoon. I entered a nice trade. Why did I enter that trade? I entered this trade because I don't usually scalp ranges this long. What this is a $700 range, right? Not the greatest range. I don't usually scalp ranges this long, but I did. And the reason I did, and I'm going to show you that quickly, the reason I did is because we had a nice range model 1. Now, what is a range model 1? Well, for range model 1, we've got a range high, range low. All right, and as price began to come to our range, we had a nice breaking market structure at the range high after it swept that prior level. Okay, so if this is the range high, tap 1, tap 2 swept it, and I entered a nice short here. I entered a nice short position around there. You know, I wasn't greedy with it. I took 75% of my position around here. Okay, and I moved my stop loss to entry and I let the rest ride. Now, obviously, after that trade, I got stopped out, but that was fine because I got stopped out in profit. So I already moved 75% of my position out there. Now, this is a range. And in our range, we've just broken bullishly out of that range. What do we expect after a bullish break from a range? Well, after a bullish break from a range, let's go to the whiteboard. If this is our range, we have range and up and down. We rotate up, then we come down, and then we had that huge shoot up. Boom. What do we expect after a bullish break? Well, we expect a return back into zone for continuation up to enter that trade. So this is what I believe we're observing right now. Now, obviously, there is a chance that it continues further down. Yes, we're going to talk about that, but this is the more probable play right now. All right, and where is that change going to happen? Well, it's probably going to happen at some zone here, all right, which is going to cause that break in market structure. So I'm looking to enter that long. I'm looking to time that long whenever I see that take place. When I see that break in market structure bullishly, I'm looking to take that up for a nice long. All right, so that's trade number 1. That's what I'm looking out for here. You know, where are we going to get that bounce? There is a chance we've already gotten that bounce here. There is a chance that this is the bounce and just a tiny mitigation for further continuation up. Yes, that's a possibility. All right, but there is also a chance we come further down. There's a chance we come further down. We do something like this, a bit deeper, and then we get that break in market structure for that continuation up. There's a chance. And if that's the case, I'm looking to see, do we have any zones here? And yes, we do. We have one zone. Now, this is the only zone I could find, and that zone was on the 12-minute. Okay, so here we have a 12-minute zone. I'm going to get rid of this for now. We have this 12-minute zone, which could be our reaction point in the case we continue to come down. Be careful though, guys, because if we do rally all the way down, you know, it means price action is retraced quite deep. It's retraced quite deep. Let's have a look at the volume profile of this range. Okay, let's see. All right, so we've got a value area high there, which we've obviously gotten a reaction from. That's why we're getting that bounce. We have a POC there, and we have a value area low. Usually, I don't like price to come all the way down to the value area low. I don't like it. I usually prefer it if it bounces off the value area high or the POC for that reaction. And of course, this is where we're getting a nice reaction from. But in the case we do come down, which is still feasible, I'm looking here for my trade. So based on that, I'm going to put an entry number 1 there, yeah? All right, that's a potential zone, but be careful though. Make sure you're looking at the price action to see if we get a break in market structure there. All right. Okay, so that is the bullish case if this demand zone is going to work. All right, but this demand zone, even though it is viable, there are reasons why it doesn't fill me with great confidence. The reason is we're getting several taps at this demand zone. We've had tap number 1, tap number 2, tap number 3. I don't like to see that at my demand zones. What I like to see is for price to come into the proximal line and just shoot off. All right. So let's see how this plays off. If we come all the way down there, I'm looking to enter that long. I might actually scale into that long if we come further down, because this could be the play along from here. You know, there's a high chance. Why is it also a high chance? Look at this. We have a nice juicy buy side liquidity over here. All right. So stop loss over here should get run. Stop loss over there should get run. So that's what I'm looking out for. All right. So we've got a few minutes. Let's talk about other ideas. Now there is a chance we've had tap number 1, tap number 2, tap number 3. There is a chance we come all the way down. If we break this level bearishly, there's a chance we come all the way down to the range low. And in that case, I'm going to be looking for a reaction at that range low. All right, but we've already had tap 1, we've already had tap 2, we've already had tap 3, successively taking out the prior low. To get tap 4, that usually doesn't play out well for Bitcoin. It usually means you're coming further down. All right, so just be aware of that. As far as our other levels, well, these levels still hold. They're not as strong now because we've had multiple market structure develop after that break, but they are still POIs to watch for. So that's currently what I've got my eyes on. I'm definitely looking at the zone to see if we can get a nice long. And not often do we actually get a lesson or a stream when there is a trade present. So I'm sure some of you would have entered this long already. And if you have, well done, because there's no reason why you shouldn't have entered this long. Why is that? Because we made a low, and we swept that low. Not only did we sweep that low, we printed the most juicy bullish divergence on Market Cypher. Market Cypher is a confirmation tool I use just to add and supplement my confirmations of my entries. So there's no reason why we shouldn't have entered that long already, and we would have been in a decent profit already. All right, but let's see if we take out this high. If we take out that high, then if you are in a long, definitely move your stop loss, because if you take out the high, that means this level is not allowed to get lost unless we're getting a transition. Then you can move your stop loss to entry. If we take out that high with a close and we have successful breaks, that means this is our next level to target. If we break above that high, then this is our next level to target. Okay, so let's keep an eye out on the price action. Let's see how it goes. And I'm going to put all my potential trades on the next post in a nice little picture. I'm going to upload it on Discord as well. And Discord is where we have the one-to-one chats and we have the group chat. So if you do want to connect with me personally, hit me up on Discord and we can get going. Otherwise, I hope you have a great evening. And if you are in the US, I hope you're having a great... Well, it's still evening in the US at the moment, actually. 9 o'clock. 5 hours, US 5 hours behind. All right. So yeah, kind of 4 o'clock over there. But anyways, hope you've had a lovely day, and I will see you tomorrow for further updates.